one of the key indicators to know when we've arrived as an industry is when the end customer, the end investor, the end client, whether that's institutional or retail, does not care about the technology.
Hello, everyone, and welcome back to the Crypto Playbook. I'm Jeff China Roberts.
And I'm Leo Schwartz.
So, Leo, crypto on Wall Street, in other words, call it TradFi, traditional finance, and banks in Wall Street have had like a crypto, sort of a schizophrenic relationship with crypto for a long time. They've tried to kill it, they've tried to embrace it, they've pretended they've never had a part of it. It's almost like a situationship, but now they seem all in. What's your take on the whole thing?
I mean, crypto and Wall Street have always had a contentious relationship. Crypto really started as a reaction to the 2008 financial crisis and has this idea of decentralization where no one person or institution or government can control the monetary system. So it's a bit ironic to have big firms like BlackRock or Citi come in and experiment with the space. I think for probably the past 15 years, you've seen banks or other financial institutions do little pilots around it or do some marketing stunts around adopting blockchain. But it does seem like in the past year, there's been more serious action. And a lot of that's because of the huge regulatory shift with the Trump administration coming in and the passage of the Genius Act, which created a regulatory moat around stablecoins. But I think the question always is, are we going to actually see real products that impact everyday people or really systematically change the financial system come into vogue? Jeff, I mean, you've been covering crypto for 10 years. How have you seen the shift in this relationship between crypto and Wall Street?
I mean, it's enormous. I think people forget crypto started in California. Crypto is very much sort of, born out of Silicon Valley. That was the genesis of it. That was like the heartbeat of the culture. And New York didn't really figure. I mean, it did to a degree. The New York figures everything, but the Wall Street element wasn't there at all. They hadn't heard of it for the longest time, and then when they learned of it, they wanted to kill it. And then how radically different we are now. But there's this funny in between period, sort of a notorious one. But way back in crypto winter 2015, feels silly saying that, but there was a bad crypto winter. Bitcoin fell to like $300. And this thing popped up driven by this company called R3 and the Wall Street banks called blockchain, not Bitcoin. Where they wanted to have the elements of like a secure ledger, but without any of this sort of like peripheral decentralized sort of sketchy people around it. And you can guess how that worked out.
Yeah, I think you've just seen this repeat over and over again over the past 10 years, where banks have sort of tiptoed in when crypto's hot, quickly left when there's a backlash against it. And I mean, now obviously we're in a huge bull run. There's a ton of excitement around it. You see banks talking about getting into stable coins, tokenizing stocks, even holding Bitcoin for customers. I think the question again is whether this will actually last or whether you'll start to see something like stable coins or tokenized stocks in your bank account or your brokerage account. But we have a great guest today to talk about it, Artem Korenyuk from Citi, who leads up the bank's approach to how enterprises deal with digital assets. I mean, Citi's been at the forefront here for a while, trying to integrate stablecoins, tokenization. They have this product called Citi Token Services that allows different Citi customers to be able to transact 24/7 using a private blockchain. So I'm going to really try and get into how he's seen the approach shift on Wall Street since he's been working on it, which has been for 10 years, and then what he thinks might come next.
Yeah, and I think it's just remarkable. We're talking to Citi in the first place. I mean, it's one of America's biggest, oldest banks. And the fact, they like JP Morgan and, the other big banks have all got these very sophisticated crypto people working for them now, which is a sea change. And, last thing I'll add is that, while it's easy to kind of like, mock Wall Street and the sort of, bumbling banks on this front, one thing they're very, very good at is finance. So I think they bring this level of financial sophistication. I don't think they organically have the, familiarity or the culture of blockchain or, sort of crypto genes, but they sure do know finance. And I think as the two kind of come closer together, we're going to see some big changes. So really looking forward to seeing what he has to say.
Yeah, let's turn to Artem. Artem, thanks so much for joining us today. Really excited to talk to you.
Yeah, this is awesome. Look forward to it. Thanks.
I think we have a particularly fun subject today, which we've talked about a lot in previous episodes. But I mean, crypto really started as this anti institution, anti Wall Street response to the financial crisis in 2008. And obviously, the past year or two, you've seen this flood of Wall Street interest from BlackRock to Citi. It's really rooted much earlier before with a lot of banks and financial institutions exploring blockchain. So I'd love to get a sense from you today on, what your own background is with this intersection between crypto and Wall Street, and also what's coming next to the space. So maybe starting off, when did you first get into blockchain and crypto?
Yeah. So personally, I was interested in, pretty early. Originally from Ukraine, it was introduced to me through my friends back in, I want to say 2014. Read the white paper, got orange pilled a little bit. Thought it was very interesting. It was quite easy for me to understand the problems that it was solving at the time, given sort of my background and coming from a developing nation in general. So that was quite interesting. And then I didn't get into it until a few years later. I've spent my entire career in traditional financial services, but right around 2015, 2016, I was at a company called DTCC and in a derivative business, and Bitcoin started to emerge and to become a little bit more prominent in, call it, Wall Street, right? And CEOs started to hear about it a little bit more, and it was what does this all mean? That's that time. I think you probably remember that as well. And so the DTCC CEO was no different and wanted to essentially figure out what this means, and ultimately established like a task force to figure out what this means. So I already had personal interest in the space, decided to take a stab, apply, and got involved in the digital asset space. I mean, it was Bitcoin and blockchain at the time, right around 2015. And so have been broadly in digital assets since about now. It makes it almost a decade, which is pretty wild. Did that for a number of years, and then I stepped away from that to run more of a traditional cash equity and fixed income business, drive business development and growth there, but have rejoined Citi about 2.5 years ago into my current role, and I lead the enterprise digital assets team for Citi, which sits across all of our institutional and consumer businesses. So yeah, you just made me do the math, and I just realized it's a decade.
Yeah, I mean, you're really an OG in the space. I think anything pre the 2017 ICO era gives you immediate street cred.
Yeah, yeah, yeah.
And I think we'll get into this, but there's different ways that financial institutions can get into crypto more broadly. Obviously, just buying and selling or custodying Bitcoin is one, but what an organization like DTCC or Citi looks at also is the actual technology of blockchain, right? Like tokenization, how you can use permissionless structures to create more efficiencies or to lower costs. And I think at this point, banks or other asset managers or financial institutions are looking at crypto in lots of different ways. So, I mean, maybe when you came back to Citi, obviously it would have been in the wake of the FTX collapse. There was still a lot of volatility around crypto. I mean, how was the bank thinking about blockchain and crypto at that point?
Yeah, look, I mean, broadly, I'd say before FTX, during FTX, post FTX, the bank always looks at it from a very, risk managed perspective, right? We do not, and speaking specifically about Citi, we do not operate in the gray, right? We are very much focused on operating within, the regulatory perimeter around the space. So that doesn't really fundamentally change. I will say that we look at digital assets more broadly through like four pillars. There's and you sort of hit on it a little bit, which is the blockchain as a technology, right? Ultimately, leveraging the technology to upgrade or modernize our rails, whether that's for money, whether that's for securities, trade finance, you name it. There's the Bitcoin or crypto as an example of as a new asset class, and it's really around looking at ways to provide our existing customers with access to this new emerging space. The third one is really around, well, looking at ways to service new clients, right? So clients that are emerging in the crypto ecosystem, how do we provide those players traditional banking services, right? So it's kind of that convergence of a DeFi and TradFi. Again, in your sort of opening remarks, you kind of mentioned that, crypto started as this fringe thing and a bit more rebellious in a sense, and things are now coming a little bit closer together in terms of this convergence of DeFi and TradFi. So that's kind of the third angle, is really around servicing this ecosystem. And then the fourth one is generally around looking at it from a network perspective. And what do I mean there? Like Citi as a whole, we view ourselves as a network bank, right? From a payments perspective, we're in 94 different countries. We're connected to 200 or something clearing systems across the world, right? That's a key positioning from our perspective. Even take custody. We are in 63 different markets. We are direct custodian in those local markets, and in many ways, we are the custodian for custodians, right? So the broader breadth and the network side of things is very much rooted in sort of who Citi is and what our core strategy is. And so when we think about the emergence of blockchains, cryptocurrencies, all the different protocols, public, private permission networks that are popping up, we know that we will need to be where our clients need us to be. So that's broadly, again, a hyperbolically high level, but those are kind of the four pillars of the way we look at um, digital assets, crypto, blockchain, and obviously from a client perspective as well.
And I'm always curious about that aspect, which is what clients want at this point. And I know one of Citi's premier blockchain projects is Citi Token Services, which is a private blockchain, right, for being able to do money movement. And I'm curious how you've seen client demand shift, and really who are the types of institutions and people who are asking for these services.
Yeah, no, absolutely. I'll say when it comes to blockchain technology, one of the common denominators that you'll find as you talk to me, talk to Citi, is that we don't lead with technology as a solution first. We lead with what is the exact value for our customers. And if it happens to be blockchain, perfect. If it doesn't, equally good. Right. So, and that's kind of a key focus area for us. So, City Token Services, you mentioned, right? We've been live for almost 2 years. We Our that solution enables the 24/7 movement of liquidity across a number of different city branches across the globe for U.S. dollars. We have customers using it and benefiting from it tremendously. But we talked about, it is leveraging blockchain. It is permission blockchain. You are correct. But the one key aspect of our design has been to not, as I mentioned, not lead with the technology. And what I mean by that is we designed it in a way to make sure that our customers don't need to figure out how to hold a wallet or how to run a node or what protocol to use or how to interface with it. We've designed this solution that's fully integrated into existing client interfaces, user experiences, etc., so that there's less of a fragmentation of the user and actually helps drive broader adoption. And what clients really love is, sure, that it's blockchain based, but the fact that it's 24/7 liquidity, and it can be done through the existing interfaces from their perspective as well. So like that's a key area, and that is a common denominator in terms of how we design our solutions. Our uh, digital asset platform that sits as an enterprise-wide capability has been designed at the root in that very same way. So as we look at other use cases beyond City Token Services, very similar model to make sure that the customer themselves is abstracted. They just get the benefit. They don't have to carry the tech debt, if you will.
And I think this is a helpful point to break down for people, especially not as familiar with crypto or who are very familiar with crypto, because I think there's so much marketing language and jargon and pilots and experiments, especially on Wall Street, to try and capture the allure of blockchain and not really explain what it might do. I mean, can you explain in really simple terms where you've already seen tangible differences in what blockchain can offer? And I think the token service is a good one because, I mean, it allows for 24/7 money movement right between different city branches. But why was that not possible before? And what is blockchain, in this case, a private blockchain, so not a decentralized one like Bitcoin, but still decentralized technology, or I should say ledger technology? What does it do that wasn't previously possible?
Yeah. I'd say one of those angles is definitely, look, public or private, one of those is censorship and trust is one of the key distinctions, right? So if you are in a controlled environment within the city network, that isn't necessarily a factor, right? But there are other elements, and this may take us down a slightly more nerdy rabbit hole, but around the ability to restructure the way systems operate and run. Instead of having siloed databases with siphoned off business logic that is executed in very disparate ways, whenever you need to make a change, you have to regression test the entire system. By building it through in a blockchain-based system, by enabling smart contracts to actually house a lot of the business logic and have it be directly associated with the underlying token, enables what we typically reduce everything to: programmability and composability. And so that's one of the key differentiations here that actually enables the 24/7 component of it, is it drives the broader automation that previously would need to be done otherwise. That introduces additional risk if it's done in a different way. The other piece is if it's done on a broader platform. I talked a little bit about composability. Well, traditional financial markets are built on a system design that says, I have a system for money, I have a system for securities, and within that, I have a system for equities, I have a system for debt. All of those have to figure out a way to speak to each other, and they're not directly interoperable and composable. If you're building things on a blockchain, a token is a token, a smart contract is a smart contract. You can build a general purpose system that brings cash, securities, all into the same architecture and enables like economies of scale and broader efficiencies. So the audience might have fallen asleep on this one, but that's kind of the one of the additional differentiations. And this has been a core part of our enterprise platform. So Citi Token Services uses it. Work that we're doing in custody and other businesses are using it as well. It really starts to bring this broader composability of different assets, securities, money, all into the same structure that unlocks greater value for our clients. That's just one of the sort of elevator level breakdowns.
And that's, I mean, obviously a more esoteric, specific one for specific types of clients. And I think it's important to break down. But when you look more broadly at the types of products that might actually hit the bank accounts of everyday people, or you look at what other financial institutions like BlackRock are doing now with tokenized money market funds, or the SEC even talking about allowing tokenized stocks. I mean, where do you see the future of that intersection of Wall Street and blockchain headed in a way that might have a broader impact?
Yeah, no, I think it's definitely in the direction you just outlined. I think, like, I've been on this journey for a decade, as I mentioned. I would be remiss if I was to say that my job is getting a lot more fun now. Um, so I look, I think we're very encouraged by the regulatory push from the Trump administration with the work that the SEC's been doing in allowing you know the U.S. markets to innovate, right, both for the crypto sector and for financial institutions, while also preserving sort of the safety and soundness of markets, and that's obviously that pairing is key as we move forward. Um, I think the broader direction of look, blockchain technology, public or permissioned, is very much a network-based technology, and the core of financial services is about moving value around. So obviously that symbiosis is very, very key. And so that's definitely likely to play a key role. Now, the one thing, and I've said this before, some others may have heard me say this, but like one of the key indicators to know when we've arrived as an industry is when the end customer, the end investor, the end client, whether that's institutional or retail, does not care about the technology, does not care about what protocol it is, what smart contract it is, right? Just like today, investors don't care whether it's on a mainframe or a Postgres database. That's going to be the target state for us. It's just going to work. It's going to be operating in an efficient way. It's going to introduce entirely new products and services, and it's going to enable new ecosystems to develop. But that's sort of the target state to me in my mind.
So from a more skeptical perspective, I think at least from my end, I've seen an ebbing and flowing of the interest from traditional financial institutions with the roller coaster ride of crypto, which is inevitable. I mean, some might argue that we're not going to see a downturn now because crypto is more intertwined with the financial system. But I do think it's somewhat inevitable that interest once again will wane. And you've seen consortiums like R3, which was a bunch of financial institutions coming together many years ago to work on blockchain and then sort of dissolve it. I mean, could that happen again, or do you actually think blockchain is here to stay on Wall Street?
Well, no, I think blockchain is here to stay. That's an easy one. Blockchain is here to stay, without a doubt. I mean, we've seen that across the board. The question, of course, is blockchain going to be used for everything everywhere? I would say no, that's too naive of a statement as well. There are plenty of use cases and scenarios where a centralized database with a central operator is a much more efficient system. The other thing I'll add is, will everything be on chain? Also not the case, right? We're seeing more and more architectural evolutions in the public blockchain space where we're seeing, more things be taken off chain. We're seeing L2s start being set up to create these efficiencies and scale and more tailored governance. So the space will evolve, and especially when we talk about the space evolving to bring in traditional financial assets, even with evolving regulations to maintain compliance. All of that will need to happen. So, but yeah, I would definitely say blockchain is here to stay. The detail, of course, being for what and at what scale.
Yeah, I mean, the idea of everything coming on chain is an interesting one. And I think there's been a lot of hype right now. I mean, obviously, stablecoins has been one area, but tokenized stocks is another. And this idea that pretty much any equity can be issued and traded on the blockchain. I feel like you probably have an opinion on this, having worked at DTCC. But do you think that's one of the areas that there might be more hype than reality right now?
Look, there's a lot of attention. There's a lot of attention to the space, and we're certainly paying close attention to it. There might be value in doing so, but I think the key when it comes to equities, public equities, right? These are instruments and products that access the end retail investor. So this is an area where, and I know the SEC will certainly be quite diligent there to make sure that as we look at innovating in this space overall, that we do so in a safe and responsible manner. But it's definitely going to be interesting to see how this space evolves. And yeah, the players like DTCC and other institutions are obviously key factors in that evolution overall.
And how about stablecoins? How are you thinking about that now? I know there's been reports and discussion from other city executives around uh, issuing their own stablecoin or maybe doing one with other banks. I mean, where do you think this will really change how banks and especially Citi operates?
Yeah, look, first of all, obviously welcome any regulation and regulatory clarity. So obviously with the passing of the Genius Act has been a big win for everyone across the board. Certainly from a bank perspective, we welcome it because it gives us the necessary clarity. As I mentioned up front, we don't operate in the gray. So with regulation passing and eventually when it comes into effect, that'll give us the opportunity to get more involved. And obviously everything we do is client driven. So as our clients want access to this ecosystem, that's going to be up to us to provide it, right? So I certainly see and welcome that development. Overall, from a stablecoin perspective, it's very much an interesting development. It's not new, right? It certainly is new from a headline perspective, but it's been a while for a number of years. And you could actually draw parallels to it, very close parallels to, you know, over 100 years ago to banknotes, right? National banknotes, very similar concept, just not blockchain based. So definitely an interesting development from a city perspective. We see stablecoins as another payment method, as another payment network. As I mentioned, we're connected to 200 different clearing systems. We support a variety of payment networks, and as our client demand emerges, we will need to support stablecoin rails as well.
So are we going to see Citicoin anytime soon? Do you have any sneak previews on the name?
We are look. I think Jane mentioned it in one of our quarterly earnings that this is a space that we're watching very closely and evaluating what the opportunities could be. So that's probably as far as I can go in terms of what we're doing.
And just last question, because I just want to touch on this point again. I mean, so much of the history of the crypto industry was these fringe characters, many of them coming to small conferences in hoodies or more ridiculous attire. And now you've seen this influx of people in maybe not ties, but at least jackets, and a lot of folks from Wall Street coming in. I mean, do you see any irony in that or any clash of cultures, or do you think this was just the natural evolution of the crypto space?
I'll add a point to that. I actually put on this jacket for this interview and took off my hoodie. So there's a mirror image as well, right? You'll see people like me in financial institutions that try to adopt some of that. So it's been an interesting blend of principles, philosophy, but also culture as well. And I think one of the things that's what we're seeing as well is the regulatory piece. Many of the players in the crypto ecosystem are recognizing the importance of uh, you know, having the trust and the regulatory clarity around a lot of these initiatives, and this is where a lot of synergies exist between the two. And so that's definitely it's more than just hoodies evolving into jackets, and the reverse as well.
Yeah, jackets evolving into hoodies.
Yep. I am wearing sneakers right now, for the record.
Well, Artem, thanks so much for joining us today.
Yeah, no, absolutely. Really enjoyed the dialogue.
Well, Leo, interesting interview. What was your biggest takeaways from that?
Yeah, well, I thought it was helpful to have someone who's not one of these new TradFi people coming in crypto in the past couple of years, but Artem's actually been working adjacent to blockchain for 10 years. And I think what's most interesting is, banks obviously take a very risk averse approach to new technology. And there's this constant shift between Bitcoin, not blockchain, or blockchain, not Bitcoin. I mean, this time around, it really does seem like what banks are embracing is tokenization, the technology of blockchain, not necessarily holding crypto or issuing their own cryptos, although that's certainly part of it. And, for a giant institution like Citi, they certainly have been doing products around blockchain, but it is much more in the weeds, permissioned blockchains that allow clients to be able to move money around. And despite the warp speed that we're seeing the US government move at, I don't think we're really going to see an upending of the US financial institutions through crypto anytime soon.
Yeah, and in the past, I'm curious. I mean, because you're sort of the expert on, DC and reading the political tea leaves. In the past, they've retrenched partly because the market blew up, but also because then the market blew up, then the regulators got angry and started looking for things, so they got far away from it, which is what banks do. I mean, they're highly regulated. They're regularly punished by the government for all sorts of things. But do you think this time is different? Are you pretty sure 2 years from now that Citi and the rest of them are going to still be in the game?
I think, and this is what Artem said, that blockchain is here to say to some degree. The question is whether it's true decentralized blockchain like with Bitcoin, or if it's this bank version of it, which is basically highly permissioned, highly centralized, but still using distributed ledger technology. So, we might see banks like Citi launch their own stablecoins, but will it be like Tether? Probably not. It will be their own version of it. So, like always, you're just going to see these two disparate industries sort of merge into one, and banks pull the aspects of it they want. But it does seem like they're not just doing lip service, and they're actually adopting key parts of the blockchain tech stack.
Yeah, I think Satoshi would be horrified by the review of the whole thing, but maybe part of him's pleased. They took up some of his technology. So here we are. Anyways, we're out of time. Thanks so much for listening, everyone. I'm Jeff John Roberts.
And I'm Leo Schwartz. See you next time.